Hey guys, today is Saturday the 23rd of July. Um, and I haven't done one of these videos in a few weeks. I've been quite busy working on a few other things. Um, and plus, I've had a bit of a break from the charts for the last 5 days, which is a record. I'm just coming back on now and just coming back fresh. And there's a few things quite important that are happening now. And I'm not going to probably moving forward. I probably won't do many of these weekly videos. It's really just time at the moment that I'm losing. So I'll still try and post some short ones and stuff like that. But I wanted to work on this one today because we're heading into a really, really crucial time in the market, right? And I won't cover, I'll only cover the real main markets, right? That I generally focus on in terms of getting some sort of direction. So, okay. So, just before I kind of look at this, right? Now, I know most of this stuff's going to probably bore you, even if it goes to like 10, 20 minutes or whatever. But I think it's going to be important that you pay a little bit of attention because, and kind of back this up with, by following this up with, other stuff that might be on YouTube. There's plenty of people out there that know a lot more than me and, have a better understanding, a lot more experience than I do. So check them out too. I can refer you some of them too. I've got no problem with that. People, this way how do I best explain this? I think a lot of people have very short-term memories, right? And it's 2008 GFC was about 8-9 years ago, and it seems like people have forgotten what happened, right? And literally we were pennies away or bees dick away from total credit collapse. So this time it's gonna we're not going to be able to escape it this time. So, and I don't expect people to fully understand it. You don't need to, but I think you need to at least understand some of the high level stuff, right? Because this is a really important time. You're talking about your wealth, your entire wealth being wiped out. So, and that's not exaggerating. That is seriously the case. So, and what I do really is I try to provide whatever information I can, but I'm looking at multiple different markets, right? Because there's you can find a lot of clues, right? And when you start to see markets diverge and converge, that's where you can kind of build a case to which direction the market might go. But right now what you're seeing all these markets that are all over the place. Like, for instance, I'll give you an example: gold and the US dollar, right? Generally, when the dollar goes up, gold goes down. Vice versa. When the stock market goes up, generally property goes down, or the dollar goes down, for example, right? But you're kind of at this situation where you've got the bond market is up, you've got the stock market is up, and you've got gold is up. So you've got three major markets that are all rising. And technically, that shouldn't happen at all, right? One has to give way, right? So that's already telling you that something funny or fishy is going on in the market. We're going to probably find out very soon, right? Because one of them is going to have to give way, okay? So I'll kind of just to do this as quickly as I can, and I'll try and come up with anything else as I go. So yeah. So you're looking at the S&P 500, so the major stock index for the US stock market. As you can see, right, we've been looking at this for quite some time, and since then, since the last time I was checking, you can see that the market broke, did a false break to the downside, and then we got this big move to the upside, and since then we've made new highs, right? So even on the weekly, you can see we've made new highs. It's just completely ballooned above that, right? Now, most people look at this and they get a bit excited, right? They go, oh, well, we're going to see highs. We're going to see 25,000 or 40,000, Dow and so forth. But, you've got to look at the technicals, right? You've got to look at price action. So you got this breakout, which is fine. But look at the volume, right? Look at the volume. It's barely, how did the market have that kind of significant rise, really minor pullback, and you've got this much volume traded, right? If you just compare it to this one, for example, look at this. This is the volume's about 10, 12 times more than this, and you can see what's going on here, right? Something's not right. And if you start looking at the other markets, right, because the two other stock indexes I look at is the NASDAQ and the IWM, or the Russell Index, Russell 2000 Index, right? Because generally they give you clues, right? Because these two markets, the IWM and the NASDAQ, are considered risk markets, right? Mostly the NASDAQ is all the tech companies. IWM is mainly all the small to mid cap size companies, like basically the penny stocks to some extent. But investors generally look at this as being risk assets, right? Because they're not the BHPs, they're not the Goldman Sachs, they're not the ANZs and stuff like that, right? They're a lot more risk compared to those banks and compared to those companies. So generally, money will start flowing into in a bull market. In a strong bull market, you'll start to notice that money, right, will tend to flow to these kind of risk assets, right? Because generally, if the stock market's going up, then people take a bit of a gamble and kind of trade the cheaper stocks to make a better return, right? So when this starts to head up, generally it's a sign to start buying into the S&P and the other stock indexes, right? They generally start first, and money tends to leave these markets first, right? So when big investors start to notice that something's not right, they'll start to take their money out of the riskier assets, which is common sense, and start parking into more safer assets, right? So when you start to see money leave the Russell or the NASDAQ, that's kind of an indication as to we might see some change, right? So that kind of gives you a bit more, clarity on that. So just looking at the NASDAQ, you can see, and I'm not going to really go into too much detail about exactly what everything's doing, but you can see right here where we're heading into, right, a major structure high, right? So the market's obviously going to get tested here. If we break above that, which we could, then who knows, right? I'm not going to kind of say we're going to go down or up now, but we're definitely going to see some sort of resistance there, right? Now, if I go to the monthly chart, which is, obviously each candle being a month, you can see right now, right? This is dating back to 2000, right? So you can see the market's kind of heading into this major resistance zone, right? This is the previous high of the NASDAQ. So does this tell us that we're going to see a break above and maybe higher prices, or we're going to see some kind of major reversal, right? Because if we're going to see a reversal in the market, it's going to start with the NASDAQ and the IWM, okay? Generally. So that's something to keep an eye on. Where this is telling you something. This is giving you a lot of clues, right? We're at major resistance, right? So something's going to give, right? IWM should be pretty similar, right? IWM's been a little bit weaker, but again, it's kind of putting in this bearish rising wedge pattern, which I keep talking about, right? So the market's going, it's making a high, then making it as such. And then at some stage, we should see some sort of a break to the upside, right? Whether it's going to test these highs. And, we could see a reversal, right? We don't know, right? But, again, this is heading into major resistance, right? And the IWM, I've got to say, has been looking a lot stronger. But someone once told me that the market does everything it can to make as many people look like fools as possible, okay? So when everyone thinks it's going up, everyone thinks the market is all fine, the economy is going great, that's when, you get these surprise moves, right? These snap moves where it completely wipes out, people's portfolios. So there's something, again, to watch, keep an eye out for. The other thing is when you start to hear all these so-called experts on television or CNN or all those kind of mainstream channels, when they start talking the market really up, when they start promoting it, telling people to start reinvesting because we're in a bull market or whatever the case, when you start to see a lot of them do that, that's generally a sign to me that we're likely going to see some sort of reversal, right? It happens all the time, so just keep an eye on that. That tends to be a pretty decent signal. It's like buy on the rumor, sell on the news, right? So Now, I want to look at oil quickly. I'm not going to really talk too much about oil, but oil's looking very strong, right? So, we've had, I did say quite a while ago, I said that if we break this level here, which we did, we've broken closed above that level. Watch out for more upside in oil, right? So all it's done at the moment is, it hasn't gone down, right? It's just basically consolidating like this. It's just taking a break, some profit taking, and it's resumed its move, and now we're seeing the same thing. Now the question is, are we going to see? I haven't seen this sort of pattern before, but are we going to see a retest of this level, right? Bounce up and then continuation to the upside, because that's going to be really, really interesting. We see that, right? But oil looks, not too bad, right? We could go down. I don't know, right? But Dow Transports as well is a leading indicator. So generally, these kind of transport indices or transport markets, they're very important markets, because that tells you, how the economy is really moving. There's a lot of stuff being transported across the country, couriers, truck drivers, all that kind of stuff. That shows you that there's something's moving in the economy, right? There's no, everything's moving fine. But when you see these markets begin to slow down, right, that tends to give you a bit of an early warning sign that maybe things aren't that great, right? So something to keep an eye on. Like, again, I'm not going to really go into these markets too much detail, but it's we're basically in a bearish we're basically in a bearish trend now, right? So we've broken these structure levels here, and the market's clearly in a bearish trend now, right? So the question is, are we going to break to the upside, right, or we're going to see some kind of reversal continuation, right? So that's that there. One thing I missed as well is the VIX, right? So I should have talked about this after the S&P. The VIX is very important, right? Because the VIX is called the volatility index. Usually it tracks the S&P 500, and it usually it's measured by the number of puts and calls that are bought in the market, right? So puts and calls are basically options. So generally, most of the people who are have a pretty decent understanding of the stock market and how it works, they will usually buy options. Basically, I won't go into too much about options. There's plenty of videos on it online, but they generally yield higher returns, right? But they can be risky to play, so you can lose a lot more than you expect. But if you do happen to be on the right side and able to time the market right, because this is all based on understanding when the market's going to reach certain levels by before the expiry date, right? So if you're saying that in a month's time the VIX is going to hit 26, just as an example. So that's by August, say end of August, it's going to hit 26. Now, if you buy the contract now and it does hit it before then you're looking at I don't know what the percentage returns are, but you're looking at least 10 times or 20 times return, right? So, but again, there's risk in that, and check some videos. There's heaps online that can explain that to you a lot better. But looking at the VIX now, you can see, right, we're right at the lows, right? These are the absolute lows, right? And the market's has respected this kind of level there, right? So what does this tell us? Are we going to see more downside, or is this a sign that we're going to see a reversal to the upside, right? Now, if I zoom in a bit closer, you look at the daily, you can see the market put in a bottom, right? Put in a bottom, and you've got some resistance here, right? Which it's kind of touched and pulled back. So the market's done this, right? The market's come back. Right, let me just zoom it in bigger. So the market's come back down. It's put in a doji. Nice reversal candle. Rallied up. Retested the previous resistance level. Previous support level, which is now turned into resistance. And now we've got a retracement, right? So if you want to go a little bit extra, let's see what kind of retracement we've got, right? I want to see a 61.8, right? Basically, I want to see 61.8% retracement, right? So if we get that, we're going to see some reversal, right? So we'll do a reversal. Perfect. Bang. 61.8, right on the dot, right? Close right on 61.8, right? Ignore the wick, right? The wick's not important. Where it closes, that's important, right? So we close right there. So we're going to see we might see some little downside, who knows? But this is already a kind of an entry signal almost if you want to get in. So that's the VIX. So you can see here, right? If I go by the weekly, so you can see it a bit better, right? You can see that every time we've had a major crisis issue, this is going back to This is going back to July, end of July, right? Which is pretty much in August where the Chinese stock market crash came. And you can see the big move there. This one would have been 2000. This one was the start of the year where we had the stock market pretty much, ending the first month on, basically a lot of selling in the first month, right, of the year. And recently we had the Brexit, right? So you can see there's these little spikes there. This one was from the 2008 GFC. You can see that was crazy, right? Extreme volatility. So this is a good indicator to keep an eye on, right? Because generally when the stock market's down, you'll see this coming up, all right? What else is there? I just want to look at the dollar, right? Now the dollar is still strong, right? To some extent, right? The dollar's basically put in a bullish consolidation pattern, right? So it's basically just, had a big rally, and then since then it's just been consolidating, right? So this is just a normal, healthy consolidation, bit of a rest period, bit of profit taking before, you see a potential break to the upside, right? Now, I don't trust the US dollar, but, this is telling that we're going to see higher prices, right? Now, I'm not going to say why. I'm not going to get into that, but you can see that this is starting to look pretty interesting, right? Now, I don't know how high it will go. It could just basically make a minor move, but I want to show you this bit here. I mean, now I can't get the data from further back, but I can tell you it's not much higher, right? Now, let's do just a simple trend line, right? Pitch and tops, right? And like I said, I don't have the data, so I'm just kind of guessing where it might be. But you can see here that, there's an important level coming up, right? The 105s, 107s, somewhere around there, right? This is telling you this is an important level. Now, if we do reach there, what's going to happen, right? This is going to be a very important level to watch for. So, again, if I can get the data, I'll get it for you and show you. But you can see that we're heading into a very interesting period in the US dollar, right? Now, the other thing is you're going to look at gold, right? Gold is friggin' strong, right? So and I've been saying this for quite a while, for 2 years, right? I was talking about gold and silver being the next buys 2 or 3 years ago. And I've been trying to accumulate as much as I can slowly, but I started buying gold stocks when people were calling me crazy, and what people don't realize, people keep saying to me, well, gold's gone down from its highs since 2011 and it just looks crap. But guys, this is what you can look at, right? Look at the high time frame. Do a fib retracement, right? And tell me, right? Gold has come down to a 50% retracement, right? Not a 60%, but it's 50%. And since then, it's breaking above. So we might still see a little bit of downside and continuation up, but this is basically a classic continuation pattern, right? This nothing about this tells me that it's bearish, right? This is just the gold rallying since 2000 up to a high, right? Since then it's just gone down, but this is just profit taking. This is the healthy retracement, right? And now we're starting to see the break. So I don't understand how anyone can tell me that this is a bad chart. This is as bullish as you can get, right? And we're going to see, I reckon we'll see new highs in gold this year, potentially higher. So you haven't gotten to gold positions, or whether it's paper positions, stocks, or the physical metal itself, you're really missing out. You're like, especially the physical aspect of it. So, but we could see some retracement over the next few days or few weeks. That's fine. It's had a bit of a run, so it's just normal for it to have a retracement. But if you guys aren't positioned if you guys don't even have even like a little bit of physical gold or silver or whatever metal you're going to get, you're going to have a really, really hard time getting some later, all right? And I'll give you an example. I'll try and compare it to something. When the new iPhone comes out, and you get all the fanboys and the people, all the other people line up for days or whatever it is, and pay like $10,000 for an iPhone. That's going to be for gold, right? But so when people realize that the paper is worthless, paper money is worthless, And you know they can. You got to understand, governments are printing money, right? What I keep saying to people is, why are you saving money for? Right? I get you have to save money for something, but people just keep saving, and they don't even bother spending it or doing something with it or investing it or something. Why would you save your money when the government and the banks are printing money? They just keeps on printing. They've already said they're just going to keep printing, right? They're not going to raise interest rates, not for at least some time, right? So if they do that, that means that every dollar you own in the bank is getting basically taken off you. So that dollar that you invested back 10 years ago is now probably worth $7, right? So you're losing value. So every day you keep money in the bank, right, you're losing value. So it's important to kind of take it out, reinvest it somewhere, or buy physical metals, buy Bitcoin, reinvest it into, I don't know, some really good stocks if you can find one. But don't keep it in the bank, right? So this is the interest rates going down is not on purpose. It's not a coincidence. It's intentional. Okay, so you know, if you don't believe it, you think it's conspiracy theory, that's fine. You know, just keep your money in the bank. You know, basically that's one less person to stress about, right? But you're seeing this is telling you something, right? You've got to look at all the markets, and I don't have time to kind of go through each one specifically, but you got to look at the convergences and divergences and the relationships in these markets, because it's telling you something really important, right? These moves aren't accidental. These are really, they're not random, right? So what I think is going to happen in the next, we could be, you know, the market could roll over as soon as next week, right? And I know I've been saying it for a while, but you got to understand that I'm not the central bank, right? I don't dictate and control interest rates. So these guys that do, they have the power to print money, right? That can only go for so long, right? They can keep printing. They can keep this going sideways for a little bit longer or even higher. But you know, the more that goes on, the more which of course that word again, it doesn't matter, but you know what I mean, right? The higher it goes, generally the harder it falls, right? So yeah, so just keep an eye on that. I didn't want to talk too much about specific trades. I think you've got the idea. But we're very close, right? We're very, very close, right? We might still see this keep going up, but it's going to be some sort of correction, right? And at some stage, you're going to see the market make a big move, right? Look at this. This is 2001, the dot-com bubble, and this is 2008. Look at the move here, right? You're talking about, you know, that was a 837-point drop, right? And then you got here was a 720-point drop. You know, if this falls, right, this will be the end of it, guys. This is no joke, right? This is the end of the monetary system, right? You're looking at least, right? At least the initial one will be 600. So that's a 30% drop, right? I reckon it's going to drop more than that. Like not at one go, obviously, right? But over the course of 6 months, a year, you're going to see a drop of maybe 67, 80%, right? The Nasdaq's going to drop probably 80%, right? And you just use simple technical analysis, and you can already kind of measure that already, right? You know, this is a typical, I think it's crocodile jaw or something like that, what they call it. But you know, look at this. You can see rejects, support, break above, close above, right? What do we expect next? Well, if it goes down next, we're going to be finding some support here, some short-term support here, right? Right? Now, what happens if that gets broken at some stage, right? If this gets broken, then the market will obviously head down, right? It will retest some particular level, and then it will probably rally back up, retest this, and then come back down, right? And you've got to understand this, guys, right? If the market heads down, you've only got support. There's only real strong support at that level, and that level, right? So, what do you have in between? Right? What do you have in between? You have 200 odd S&P points with no support. So if it breaks below that, it's going to be a pretty fast fall back down. Now, if we break below that, there are some mini support levels, but I wouldn't call them strong. and you're looking at potential fall of another 60%, 50%. Right? This is not going to all happen in one day. I'm just saying that it could happen in a week, 2 weeks, 2 months, who knows. But all this has been going up for no reason, right? So I know a lot of people don't understand this, and a lot of people will look at this and go, well, it's, it doesn't affect me. I don't buy stocks. But, like if you're thinking like that, you're in big trouble, because this is all about economics, right? So and everything's all systemic now. So you got this company is tied to that company, and to that bank, and to this government, and everything's all interlinked, right? So if you say the auto industry fails, then that also affects, the people that make the seats, the tires, the mechanics, even people who make car refresheners, right? Who knows? If it affects airlines, it affects, oil prices, all that kind of stuff. So everything's interlinked. So if you're thinking like that, you're an imbecile, right? Just 100% imbecile. And, if you get hurt by this, you deserve it. So, and I've been harping on about this for a while too. So, and it's going to come. It's just a mathematical certainty. So yeah. But I think I've explained just enough. I'll try and do some more videos as I see it. But you got to understand that all these global things you're hearing in the media, like terrorist attacks, Brexit, all that stuff. This is all plays a part in this, right? It's not by accident. And I won't get into it because it's too much to kind of get into. But just keep an eye, be aware, and if anything, just send me an email, shoot me a text or whatever it is, and I'll see what I can do to help you out. So yeah. All right. Cheers. See you guys.